Good afternoon, Scott Redler, T3 Live. I want to throw out a quick video because I show you different strategies. This one is the art of trading in IPO on the first day. I've done this many times in the past. As an active trader, there's an art to approaching the market on the first day of a new issue. Everyone's excited on a new issue. Everyone thinks there's so much opportunity, but sometimes there really isn't. Unless you're part of the IPO deal, unless you've got private placement stock from years back, you shouldn't be excited. You should watch the open and trade with the strategy. Today, I wasn't as involved, but Mark Sperling taught the whole crew and kept everyone's hand held during the IPO of TUMI, T-U-M-I. What I want to do is I want to show you the art of the first day, that it doesn't matter what stock, what IPO, actually it just matters what IPO it is, not just what stock, but on the first day of the IPO, there's a way to handle it, a way to get involved, a way to tier in, tier out for cash flow so you too could be a part of the action instead of watching it and seeing the headlines after the close. So here it is real quickly. Here's the chart of TUMI. This is the first thing you do when an IPO comes public. It gives you the initial print. This is what you write down right away on your desk. The initial print of this stock was around 2680. So 2670, 2680, that was the initial print. You write that down. Within the first 15 to 20 minutes, you have a lot of flippers, you have a lot of people taking profits, you have some short guys coming in, and they start selling the deal down. What you want to do is you want to see how it holds. This is the first time it had a little bit of life, but wasn't ready, came down again. So if you were not involved in this IPO yet, what you might want to do as a conservative entry, because I think this is what Mark did, is right here when it started to break above this small descending channel, this is your first entry around 26, because at 26, at least you have a stop at 2550. 2550 was the low of this base. So if you're in here around 26, 2610, you have a 50-cent stop. You're not just buying a falling knife. So then you need more time to let it prove itself. This is your early buy. It starts going, less pressure, less pressure. Your real entry is when it recrosses the opening print. The opening print was right here. This could have been your momentum add right when it went through this 2680. You know, it could have been also your second entry if you're a little bit more speculative. Right now you'd be in the money, you'd be adding to a winner. It went through this price point, and what did it do? It held above it. We talk about when stocks get through price points, they have to show commitment. That's what it did. P.S. It's about, I would say, an hour and a half since it's been public. It hit as high as $28.65. Okay, that's another $1.80 or so above the opening print, and it's also well above the first buy that had a calculated stop. So buy one, buy two, it's now 11:30. You could have made really nice cash flow. To me, this was a very, very successful IPO. It was priced right. If you were in the private placement, you made money. If you had IPO stock, you were allowed to sell in the open, you made money. And if you're an active trader with a strategy for the art of the first day, knowing that you only want to get involved versus a level, which was that first buy, 26 versus 25.50, and then you know when it trades above and holds above the opening print, which is the print you write down in the first few minutes of trading, which was 26.80, you then had yourself a nice successful day, another vehicle for cash flow. That's going to happen time and time again, and now you know how to trade it. Scott Redler, T3 Live. See you later.